And let's start with the interest rate which we had also in our watch list and which got triggered. By the way, not only monthly income. Yeah, sometimes you have scenarios where monthly income and weekly income also overlap. Yeah, these are your ideal scenarios because it also gives you quite a large risk to reward ratio. So if I'm going to look at how far price already moved here, let's just check a 2-to-1. Okay, up here would be a 1-to-2 risk to reward ratio. So if price hits this line up here, we would have already made 2% on our wealth accounts. Okay, yeah, we take 1 or 2% maybe per month, and if we can do that consistently every month, yeah, then we grow our account 1% per month, 12% per year, and that's already more than any fund will promise you, than any banker will promise you, right? And you are growing your accounts conservatively and safely. And let's even see, all right, this is just a 1-to-2. Ideally, we will hold this trade for quite a long time. Okay, because we can really see how the interest markets are rolling over to the upside. Okay, breaking through these high areas, are creating a new low area, and now continuing to go to the upside. Okay, so you can see actually this a bit better on a weekly chart, but you can see how the first highs are broken through here even on a monthly time frame. So that means careful, first sign of trend changing here. So therefore we have traded an anticipatory trend idea right here, which is now moving in our favor. Okay, and you can also see very nicely how price has gone into monthly demand, and from the monthly demand it's now moving to the upside. Okay, really timing the markets perfectly here within weekly demand. Yeah, so well done to everyone who is participating, and I know quite of you are participating and should be participating in these setups. Yeah, our interest rates, it's a topic for itself, and it just, I could start all over again and then ask myself, why on earth are asset prices on equity indices shooting through the roof, and we've got interest rates that are also going through the roof? It just doesn't make sense in my head. Okay, and sometimes the markets don't make sense. Whenever they don't make sense, you ought to be more cautious and careful, and especially when we talk about S&P 500s and Nasdaqs making higher highs and higher highs. Okay.
This US 30-year Treasury Bond trade setup was presented by our mentors in our futures live trading class back in March 2019. During this live trading session, we identified a clear supply and demand imbalance. Our mentors went through a full analysis of the product and set S.E.T, all trading parameters needed to enter the trade. This includes a stop, entry, and target, S.E.T. Once our mentors set the trade together with our students, their work is done. Our students can now forget the trade and let it play out without spending more time in front of the screen. This predefined set and forget and get a live trading approach helps our students to master the supply and demand trading skill set without sacrificing their lifestyle. This was a monthly income trade setup. These are trades we hold for months and sometimes even years. We identified a demand zone, an area where demand exceeded supply. At our online trading campus, our students are taught to buy, go long, once price comes back into the zone. Now, let us take a quick look at the result to date. This trade is still running to date. This trade setup achieved a maximum risk to reward ratio of 1:7 and, keep in mind, is still running. This means that for every dollar you risk, you walk away with $7 of pure profit. Let us put this into perspective for proactive investors. If you were to risk $100 of your own hard-earned money, you would walk away with $700 of pure profit. Now, for our advanced traders who are proven consistently profitable, by risking $1,000, they would walk away with $7,000 of pure profit.